Hello and welcome to BQ Prime. A very good morning to all the viewers. I'm Hiral Dadia. Clearly, if you go to see, we did open with smart moves in today's session, but slowly and steadily we are cooling off and we are trading below the 19,450 mark already. Overall, if you go to see in terms of Bank Nifty as well, cuts of around 0.2% or nearly 100 points coming in there. But what's in store from here on is going to be interesting to watch out for because we are seeing a lot of stock specific action as well. Joining us on the show is Vijay Chopra of Enoch Ventures to discuss individual counters. Vijay, good morning and welcome to the show.
Thank you, Viral. Thanks for having me on the show. Good
Always a
morning.
pleasure. Vijay, let's start with the Jio Financial Services. Now that it is out from all the indices on BSE, it still continues to be a part of Nifty 50. The stock, in fact, opened with gains of little over 5%. Some cooling off that has already happened now. What would you advise investors to do now at current levels?
Well, I've been talking about this on a lot of channels, and since the rate was listed, and we were seeing lower circuits. So around 202, the lower circuits opened, and I think that from there on, the stock has shown quite some promise. So let me tell you one thing about Mr. Ambani. I've been an avid investor, and I've recommended Reliance many times, and I've studied this company many times over. In my 30 years in the capital markets. So one thing I understand about Mr. Mukesh Ambani is that whatever he does would not be, small. It would be definitely sizable. So whatever is happening in Jio Financial Services, everything is not out. But if you are having an association with BlackRock, you're planning to get a AMC in place. Planning to get an NBFC in place. So definitely they are going to, create ripples in the pond for sure, and there's going to be heavy competition, for all the financial services. We really don't know what all domains they're going to get into, but I'm sure that they're going to come with a splash. So I would recommend that, whenever you get an opportunity to buy Jio Financial Services, maybe here as well, or maybe a bit down, maybe 10, 15 rupees below this price. So I would be a buyer. For a long-term investor, they can buy here. I think that the stock has a potential to double up, triple up, if somebody is holding it for a number of years. So for sure, it's a Reliance company, and I'm sure that they have good plans. So JFS looks very good, promising, and it can be bought here for the long-term investors. For traders, yes, they should wait for a correction and get it.
Right. So that's with regards to Jio Financial Services. Moving on, you're seeing some good traction in terms of metal names as well. And that is one of the cues that we're picking up is with regards to what's happening in China. Secondly, in terms of funding in terms of Tata Steel, as well as the merger that you're talking about between Tata Steel, Tata Metallics, as well as the other group company. How are you looking at metal counters specifically from a Hindalco, Tata Steel, and the other name perspective?
Well, since a number of years, I've been a huge advocate of metal companies, and especially companies like Hindalco, companies like JSW Steel, Jindal Steel and Power. I've been recommending from very low levels. Even here, I think that Tata Steel you can buy in a correction. So if at all you find the stock around 120, it's a great buy. Hindalco has moved up quite a bit. If you get it around 440, 430, it's a great buy. I would not recommend Vedanta due to obvious reasons in the debt concerns. But there are very good companies. You've got National Aluminium, Hindustan Copper. Hindustan Zinc is another good company from the Vedanta pack, but again, much less leveraged than Vedanta. So I see quite a promise in metals. Number two, whatever you mentioned that China, we are seeing, the government is pushing the infra and the housing sector big time. They have reduced the interest rates. They are helping the companies to build up again. So with this kind of a liquidity push from the Chinese government, it definitely would propel usage of metals. And China is the factory of the world even now. Whatever the world says, but most of the production happens there. So I think that this is good news for metals. And I think the economy is coming back on track after COVID and the war. So we will see metals shining over the period of next 1 to 1.5 years. So I'm fairly bullish on metals. Some of them have moved up quite a bit. So wait for a correction, get into metals for a longer term.
Right. So overall, okay. Moving on, you have a Coal India that is in focus as well. How are you looking at a Coal India?
Well, Hiral, I think that we still make a lot of power from coal. So we have to understand this that our coal requirement and dependence on coal is huge and humongous. We still import coal. If you talk about coking coal or coal coming from South Africa or Australia or United States. So there's a lot of coal coming into India. The domestic coal primarily we do not have coking coal in India. So all we have is from maybe around 4,000 GCV to or maybe 3,000 GCV to 5,000 GCV coal mostly we get in India, apart from some of the mines in Assam where we get 7,000 GCV coal, but the quantity is very less. So I think that coal would be a requirement for the next couple of decades, I guess. So Coal India is a monopolistic player and definitely a Government of India company, very good dividend yield. So I think that, Coal India is a long-term play. If you ask me about a longer term target for Coal India is 350 for me. So buy in a correction, it has moved up 2 consecutive days. It has moved up. If at all we see some kind of a correction, we get it around say 235 to 30. Great levels to get into a stock. So plus the monsoon season is almost over. So what we see that there is a downside in coal. The mines are mostly shut due to the high moisture, and the uptake is also lesser during the monsoons. So my sense is that coal should do well from here on up till March.
Right. Moving on, you have a Kotak Mahindra Bank that is in focus. As we know, there Kotak has resigned as CEO and MD. What's the key next to watch out for, Vijay, according to you? And two, what would you recommend investors to do?
Well, I think definitely I was slightly disappointed the way it happened. Although it was supposed to happen, it was in store, but I think it was quite sudden for me as there was no succession planning discussed earlier. So I would wait for the succession planning. How who are going to be at the helm of affairs? What kind of management now would take on, and who would be in charge post Mr. Kotak? Although I'm sure that Mr. Kotak would be around to oversee, but yes, I would think that there are other banks available. There is a lot of promise in these public sector banks. So Kotak, I would say and avoid. If I see it on the charts, there is a death cross which is in the making. So probably we might see some downside. Although I'm not recommending that it's a bad bank or there is something wrong with the bank, but I think that it would be sideways for some time. So there is opportunity in the public sector banks. Be there, make money there.
Right. How are you looking at IDBI Bank then? Because the government has now invited, asset valuers for a strategic divestment of IDBI Bank, and the bids open until the 9th of October. How would you look at IDBI Bank?
Well, as I mentioned earlier, there is deep value in the public sector banks.
Ex-
Now, the issue 10 years back or maybe 5 years back was that the asset quality was pretty bad. And, now everything has been, disclosed. Most of the banks are focusing on recoveries, and the fresh loans are not that easy that used to be a decade back. So they are working on very tight, stringent processes. The branch level limits for loans have gone down considerably. So there is no leeway which the branch manager has now. If there's a larger loan, it has to go to a committee, and the committee passes a larger loan. So the risk has come down considerably. Number one. Number two, the recovery process is pretty strong. IBC is in place. So I think that the public sector banks, which have already disclosed, a lot of NPS, now I think are looking very good. Banks, I think that banks like Bank of India, smaller banks like UCO Bank, even IDBI, these are very good banks to latch on to. Even PNB at these levels. So if somebody holds these banks for 2-3 years time period, probably they might double up from here. So I think that IDBI is a good pick. Today there's a gap up, so let the gap fill. If you get it around 60, great levels to buy.
Right, great levels to buy at 60. Moving on, railway stocks have been blockbuster, Vijay. RVNL, again on the back of an order win from Gujarat, as well as you have IRFC, if I'm not mistaken, another one which is buzzing in trade. We've seen a good block deal coming in on that one. Both stocks seeing smart moves today. What's your view on both these names? And do you think it's still some time away to enter freshly? Or what would you advise?
So I think that traders who can take a bit of risk, they still have, they can play around with the juice left in these companies. Let me talk about RVNL. The market capitalization is about 32,000 crores. The order book is about 60,000 crores. So, they have double the order book as compared to the market capitalization. IRFC also is a fantastic company, and we have seen a renewed vigor in these companies. IRFC is one of the most profitable ventures of Indian Railways. Now, with any company, the problem is order book and receivables. So both are not an issue with the railways part, because the order book is good, plus the receivables are also fairly good. So I think that these companies would keep on doing good. IRFC, I would recommend wait for some time. But yes, RVNL, there is still some juice left. Probably, we might see 170, 180 odd levels.
Right. Moving on, Nazara Technologies is another one that is in focus, and this is on the back of the 100 crore fundraise plan. And this is going to be from Nikhil Kamath. Overall, what do you make of this? Because a lot of headwinds that we did see in between in terms of online gaming, someone from the stock market, someone who's more of a broking firm, is increasing stake. Is increasing stake in a gaming platform. How do you look at the entire gamut?
Well, I think that they have a huge risk appetite. So I think that Nikhil Kamath has proved a point. But any stock which is at a price to earning of 114, I would not touch personally nor recommend. So I would love to see earnings happening. Zomato was a classical case. When it touched 40, I was recommending it left, right, and center. And this was on all the major business channels. I don't remember precisely whether it was yours or not, but again, on all the channels I recommended. But again, Nazara had 114 stock price to earning, plus there was a 28% tax which came up lately, and there were headwinds around it. So the stock has moved up quite a bit. I think that it is overbought. If you get it somewhere around say 600 odd, that would be the level where I would recommend a buy. But right now, I don't think that any retail investor should get it.
Right, so that's with regards to Nazara Technologies. Moving on, you have auto companies that are in focus as well on the back of the August auto sales numbers that have trickled in. Overall, what's your view and what would you recommend?
Well, I was just going through the numbers. Hero MotoCorp, they did 488,000 units against an estimated of 469. Eicher did 77,000 units against 75,000. TVS Motors 345 against 3.33. So more or less, I think that they were in line or better. So there were a couple of companies which stumbled, but August probably is not the best season to look at auto sales numbers. Once the festive season starts, the rural part of our country, the villages and the tier 2 towns, they have money in their hands post a good bumper harvest. So that's the time to look at, the auto sales numbers. So I think that this quarter, September, October, November, even December would be good months to watch auto sales numbers. And if they have done well now, I think we are heading towards a festive season where the maximum sales happen. And I'm pretty confident that we're going to see much better numbers in the coming 2-3 months.
Right. Very lastly, Vijay, sugar stocks have been buzzing in trade today. Majority of them from a Sri Renuka to a Dampur. All of them are up and about in trade. What's your view, taking into consideration the way global prices are panning out and the way Indian prices are panning out, and you have the festive season which is in store?
So a couple of things. One, that international sugar trading around $22, $23 is a good sign that international prices are firming up, number one. Number two, we are heading into a festive season. And mind you that, about 40% of the sugar is used around Diwali and these 3-4 months. So, people unnecessarily consume sugar in India. We all know that, including us. So this time the sugar offtake is tremendously high as compared to the summer months. So one, the offtake is going to be good. I think that post this reasonably okay monsoon, barring some places have not seen rains in August, more or less the sugarcane plantation has been good. The harvest would be good. The sugar output would be good. Thirdly, government is picking up ethanol. So the target has gone up to 20% from 10%. Mind you, 3 years ago, it was 2% ethanol blending happening in petrol and diesel, which has gone up to 10%. They're trying for 20%. In countries like Venezuela, where the blending goes up to 70%, 80%, so Indian government is also trying that. So Mr. Gadkari has categorically, mentioned about flexi fuels, that our dependence on crude would go down. Our current account deficit would be much in balance once we have these things in place, and our dependence on sugarcane. India is a reasonably large sugarcane producer, so ethanol is not a problem. I suppose so, and most of the sugar companies have, have coped up with their losses with the sales of ethanol. They've increased their ethanol capacities as well. So I think that these are 4 5 levers which help sugar companies to do well, and especially the festive season. Probably, we're going to see a good harvest and a good season for all the sugar companies. So Dhampur, Balrampur, EID Parry, Mawana, these are great companies to have in a portfolio for 3 to 4 months perspective.
Right. So interesting names for one to watch out for as well. Thank you, Vijay, so much for joining us on the show and sharing those views. Clearly, a whole host of stocks and sectors that we have discussed in trade today, from metals to auto to the sugar pack, as well as the individual names that have been buzzing. That's all that we have on this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BQ Prime.